Welcome to Trading Lounge and the US indices for the 11th of March. And starting with the S&P here, I'll just start with the 4-hour chart, then go to hourly and tick, and then look at the Nasdaq. So yeah, we're getting a nice move from our high here, and we're looking for 5 waves down through here. So if I can just copy these here, we'll look at this on the hourly chart in a moment. I'll just put these here, roughly like this here. So we're looking for 5 waves down at this point here, and then we'll look for 3 waves back up here to the 50-60% mark there. And then because we get 5 waves here, then we'll get another 5 waves over here, and this presents, once we've got this 5 waves here, then this presents the perfect shorting opportunity here. And the reason for that is because in Elliott terms, if we get 5 waves in a change of direction, with the direction being up here, if we get 5 waves to the downside here, then we're going to get another 5 waves here. So it really sets it up for a high probability trade to come down this side here. So let's just go into the, saving that, let's just go to the hourly chart here. The hourly chart's where we where I sort of give an indication of where to short and put stops and so on here. So when we spoke last time, we had a short trade in here, and we've had one in here as well. We were looking to take part profit in this space here. So with this, I'll just go over the trading levels again. So from the 700 to the 800 here, 8 is much more important than 7, so to speak, and between that 100 points here, and it could be 1,000 points as well if it was on the DJ or something like that. But right at the beginning here, we have 10, 20 and 30, which I call subgroup 1, the midpoint here, which is the 50, and then group 2 here, which is the 65, 72 and the 80 here. And the more that you understand these levels in here, the more refined stops and entries and so on that you're going to achieve. So when a market comes down and hits number 3 here, then it's always a really nice support, and it comes back and hits the midpoint at that stage, and then we just really see what occurs here, and if you're patient enough, you will see that the market will either sit on this level as support or find it as resistance, and then you make a decision to go long or short from that point. The setups are really important, and the Elliott is important, but it really just gives you the direction of the market. So in this case here, we're looking for a wave 4 correction. So from the top of wave 2 here to the low of the market here, the 38.2% retracement level comes in on the 2750 area. The wave 4 of 1 lesser degree is a little bit higher up here, so we'll look at that on the tick chart as well. We can refine that, but I'll just remove that. But that's where we're looking at the moment. The other thing that I mentioned as well, it's always good to look at where you're wrong, and you know, hindsight is good for that, but it's good to preempt that as well. So if I was wrong here, then the move down through here would simply be an A wave, a B wave and a C wave to this point where wave 3 is here. So this wave 4 is critical. You know, the fact of actually getting 5 waves down here is super important, because it will set our short trades up from this point. So yeah, it's all important, and that's why we took part profit here, because we don't want to let the profit get away on us if I'm wrong. We want to be taking a balanced view. Is not going to get you ecstatically happy, but it's not going to get you ecstatically upset as well. So finding that balance point on all decisions is a comfortable way to move forward. So I'm still going to leave the stop out of the way, because we got some skin in the game here. We're going to look to take the other profit close to the 27 100 mark here, while this does its rally back up through here. But you make your own decisions, of course, and do your own thing. So let's just go into the tick chart and have a closer look at this wave 4 rally here. This wave 5 here should be roughly the same length as wave 1 here, but wave 1 was a bit more sort of, obviously looks like a bit more news driven, so just need to be a little bit mindful of that. So on the tick chart here, let's just go over this a little bit. I'll just bring in a little bit more data here for that. So so first of all, from the high up here, we can look at this in terms of wave A, wave B, and wave C here, and that's the low, and we're going to continue going higher from that point. But we do have a nice, when a correction occurs, an A wave and a B wave and a C wave, there's normally some sort of relationship between wave A and wave C. I'm sure that I can find a Fibonacci relationship between wave A and wave C here, but we kind of look towards that in terms of equality or 1.62. So this, where we spoke last time, we had wave 3, and I think we had wave 4 coming in here. So we're looking for 5 waves down, which we've got as wave 1 and 2. No need to count all of that, but it's there. And then wave 4 here to that point here, and wave 5 down to this low here. So just want to talk about this a little bit here. So we could count this up here as an A wave and a B wave and a C wave and finish right here and actually just move straight down from that point. Okay, so that's one thing that it could do here. The other thing that it could do here is that the whole move up through here can just be the A wave here, and then the B wave, and then the C wave here. The A wave here can be in 3 waves, or it can be in 5 waves. So what else might happen here is this could be wave 1 and 2 and 3 here and 4 here, and then 5 here. So 5 waves here, and then you know if you're going to get 5 waves in the opposite direction to the market, which the market is coming down here. So 5 waves here would give you another 5 waves for wave C here. But still, we would look at this as wave A here with 5 waves or 3 waves, and then wave B, which will be in 3 waves, pulling back 50–60%, and then wave C here. So the 38.2% retracement level comes in on the midpoint here at 2750, but the wave 4 of 1 lesser degree is over here. So we could certainly, I can't draw on this side of the tick chart here, but we could certainly move back up into this space here. So just be mindful of that. If this market found support within group 2 here, which is 65, 72 here, and 80, so getting support in 65 here wouldn't be a good sign for the bearish side of the market. It would, if it can come up to the 65 and then it's got to react from that point, but if it moves up, reacts, and then sits up there and finds support and is sitting in this space here, just hanging on here, well then that's the first sign of bullishness that you would look for at that point to go higher at that stage. In terms of long trades to the upside, then use the 72 here. If that becomes the test, the retested support, that number there, then you want to be looking to go long from that point. We could even close out our short trades from that point. So what I might do here is just go back to the hourly chart here, and we'll bring that stop down into this space here. So we can bring that down here. Of course, if you're going to hold all through this here, if we get the 5 waves here, that means we're going to get 5 over here. And if you've still got skin in the game here, then you'll still need to leave your stop well out of the way at that point. But that's 72 there. If that finds support there, then we need to be out of it, and we need to be on the long side from that point there. And this is the same for the NASDAQ as well, of course. So I've got it labelled with different labels here, but it's the same story again. Wave 1 or wave A, wave 2 or wave B, and wave 3 of wave C here, and going back for wave 4 here. Currently, it's at its 38.2% retracement level, but the wave for excuse me, of one lesser degree can be higher here as well. So we just need to give it a little bit of time. I mean, what we're looking for in the bigger game here is, as mentioned before, we're looking for 5 waves from here to here. That's what we're looking for. If we don't get that, well, then we're not going to get this over here. Oh, we could get a flat correction, but we'll get to that when we get to that. But yeah, we've got some short trades here. We looked at taking part profit at the 7,000 here. It did drop lower, but I'm okay with that. I felt we did the right thing, because if there was going to be a bounce, it would have normally occurred here. Yeah, let's just see if we get these 5 waves. It's really all about that, and then we can look to short at the 61.8% retracement level. Not now, but later. We still need that 5th wave down. We still need the A, the B, and the C here. And we can look to short here. We start building in this side, and we can build under the 7,000 as well here. I won't look at stocks today, because I really just want to see if we get this first impulse wave to the downside. If that's the case, then we're on our way to have a nice short trade over this side of the market, and that would be the same with stocks as well, to a point, depending on what sector's in tune with this particular count. Alrighty, cheers.